Buying a home is one of the biggest financial decisions that most Australians will ever make. It's a time filled with excitement, stress, and a whole lot of paperwork. For many people, their first instinct is to visit their local bank to apply for a mortgage. It feels secure, familiar, and straightforward. But what if that decision, made out of habit or trust, is actually costing thousands of dollars? What if there's a better way, one that offers more choice, greater flexibility, and personalised service? That's where mortgage brokers come in. Many Australians still go straight to their bank to apply for a home loan, unaware that mortgage brokers can often offer better deals and better support, whether you're buying your first home, refinancing, or investing. It's essential to know all your options. In this speech, I'll explain how mortgage brokers work and the benefits they offer, comparing them to traditional bank branches, and discuss what policies could help more Australians take advantage of mortgage brokers, especially in regional areas. Let's start by understanding what mortgage brokers actually do. Mortgage brokers are licensed professionals who act as intermediaries between borrowers and lenders. According to Angie Moore from Investopedia, in 2022, she said that rather than offering only one institution product, brokers have access to a panel of up to 30 lenders, including major banks, credit unions, and specialist lenders. This means they can shop around to find a loan that fits your unique financial situation. It's like having a personal loan matchmaker. But brokers don't just compare rates. According to the Australian Prudential Regulation Authority, referred to as APRA, in 2020, they have been legally required to act in the customer's best interests, a rule known as the Best Interest Duty. It's enforced by the Australian Securities and Investments Commission, commonly referred to as ASIC. This duty sets brokers apart from bank loan officers who are not required to act in your best interest, only to offer products from their institution. The Mortgage Finance Association of Australia in 2023 consists of a large majority of brokers in Australia, ensuring on their website that their members follow strict ethical standards. According to a report from the MFAA from 2023, over 67% of Australians now choose to use mortgage brokers for home loan applications. This number has grown steadily in recent years, showing that public trust in brokers is increasing, and for good reason. Brokers work around your schedule, offer ongoing support, and in most cases, don't charge borrowers directly. Their fees are paid by the lender, and the law ensures that those payments can't influence their advice. Now, let's compare that with what happens when you apply directly at a bank. Bank loan officers, while helpful, are limited to selling their bank's own products. In an interview I conducted with Stacey Welke, a regional general manager of Westpac for home finance, in 2023, she noted that this can restrict the borrower's choices and lead to missed opportunities for better rates or features available elsewhere. It's like walking into one shop and assuming it has the best deal in town without looking anywhere else. The issues become even more serious when we look at access. In a report produced by APRA in 2022, over 2,000 bank branches have closed across Australia since 2017, particularly in rural and regional areas. This leaves many Australians without convenient face-to-face support. In contrast, mortgage brokers often work independently and remotely. They can meet clients in person, online, over the phone, and they serve rural communities that banks have essentially abandoned. For people in remote areas, first-time buyers, or anyone with a complicated financial situation, brokers can be a lifeline. They help gather documents, explain complex terms, and guide clients through a loan process from application to approval. For people like farmers, the help provided can be life-saving, especially for farmers who don't have much spare time. Australia relies on farmers, and any money that they save helps them get food onto our table. Brokers, unlike bank staff, won't try to sell a credit card or insurance product on their side. Their focus is purely on getting you the right loan. But it's not just convenience and flexibility. Brokers can save money. Even a small difference in interest rate can make a huge impact over the life of a 30-year loan. For example, 0.25% difference on a $500,000 loan can add up to nearly $30,000 in extra payments. While banks may offer loyalty discounts to existing customers, brokers can find promotions, waive fees, and negotiate better terms. Despite all these benefits, Australians still aren't aware of how mortgage brokers work, or how they differ from bank lenders, and that's where policy changes come in. To ensure more Australians have access to better home loan options, we need to promote greater awareness and broker accessibility. Firstly, the government should support public education campaigns through TV ads, social media, and websites like MoneySmart that explain how brokers operate and how they are paid, how they help consumers, and many people still mistakenly believe that brokers work for the banks or charge high fees. Education can correct that. Secondly, we need to expand broker access in rural and regional Australia. As banks pull out of small towns, mortgage brokers can fill the gap. but only if they have the support. Government grants or tax incentives could encourage more brokers to operate in underserved areas. As Yellow Brick Road Home Loans currently notes in their introduction page on their website, brokers already play a key role in regional finance, and helping them reach more communities could reduce financial exclusion. Finally, the use of independent comparison tools like CanStar and Rate City should be promoted in schools, community centres, and financial literacy programs. These tools help people evaluate brokers, lenders, and products, empowering them to make informed decisions. These simple policy changes, promoting awareness, expanding access, and encouraging comparison, could help thousands of Australians avoid unnecessary costs and stress. More people would know what they have, more would get tailored advice, and more would get the home they wanted on terms they understand. To summarise, mortgage brokers offer Australians better home loans options, greater flexibility, and personal support. Yet many still turn to banks out of habit or lack of information. We've looked at what brokers do, how they compare to bank branches, and what policies could help more people benefit from their services. So what can you do? If you or someone you know is planning to apply for a home loan, don't just walk into your usual bank. Speak with a qualified mortgage broker. Ask questions, compare offers, and use the tools and support available to you. Because in today's housing market, where interest rates are high, bank branches are closing, and home ownership is more difficult than ever, you deserve the best possible advice. Not just one institution has to offer. Mortgage brokers are here to give you that advice, and with the right support, they can help thousands of more Australians do the same. And these are my works cited, so thank you for listening.